Hello, this is Mike Swanson of WallStreetWindow.com. I've got a very special guest. I'm speaking with Jordan Roy-Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike, I'm great. Thanks for having me on.
Well, we haven't spoken. I looked since November, and well, it doesn't matter what happened in December or much less January. It's what's happened the last couple hours that has everyone now shaken up. And the Dow fell 1,000 points, fell 666 points on Friday, and we've seen some gyrations too in gold stocks. Gold itself, though, hasn't really moved very much. So, what do you think is going on?
Well, I think with respect to, we can talk about the stock market, we can talk about the bond market or precious metals, but I'll try and weave it all together for you. I think the stock market, we know that valuations are extremely stretched. This is a historically very, very richly valued market. And so what that means is over the next 5 to 10 years, future returns are going to be bad from these levels. And how do we get to that point? You can either have a crash, which we kind of had, I shouldn't say kind of, we had that year 2000, 2007, the secular bear market in the 2000s. You go back to the Great Depression, there was a big crash after 29. That was a massive mega bear market. Then you had another 50% or more bear market for several years in the late 30s into the early 40s. But then you go to the mid 60s and 70s, and that secular bear market, where you had inflation and you had rising interest rates. And so I think the stock market is going to be, if I'm looking at history and what the comparison is, which of those past eras is the best comparison to where we are now. And I would say it's the 60s and 70s, because we're going to see rising interest rates. We're going to see inflation. It started to pick up. I think that's going to continue. And if you're looking at Donald Trump and his policies, putting aside how you feel about him personally, his policies, I think, we're obviously pulling demand forward. So I think the economy will do pretty well this year, but maybe it'll soften next year or even go into a recession. However, Mike, after that, the government could do a massive infrastructure package if the economy rolls over again. So I just think, looking at all these things, what that says to me, the most likely path over the next several years is probably higher rates, higher inflation. And with respect to the stock market, I don't know if we're at the ultimate peak right now for this massive run that we've had since 2009. But we're obviously much later in the cycle. And I don't think, Mike, we're going to see like a blow-off move like we saw in the late 90s or the late 1920s. I think we're more likely to see what we saw in the late 60s, where maybe the market grinds higher, makes a new high, but then it has a sharp correction. Maybe it makes a marginal new high after that. So I don't think we're going to see this massive blow-off move that people are expecting. I think we're going to get into a situation where we have higher rates and higher inflation, and ultimately that should really benefit commodities and precious metals especially. And I don't think stocks are going to perform as well. So that's a very big picture answer, but I think the stock market, it's corrected about 10%. It had gone a record amount of time without correcting even 5%. So it was very likely that we were going to see like a 7 to 10% correction. And who knows, maybe this correction will, maybe it's not over. But so I'm not expecting a crash or a bear market just yet. But I think the outperformance of the stock market against gold the outperformance of the stock market against gold, which has been very strong the last couple of years, I think that could be reversing right now. The gold to stocks ratio is extremely important for precious metals, and that's something that could have bottomed in recent weeks. So that's really something that I'm going to keep an eye on. But Mike, I think we're going to see higher rates, higher inflation, and stock prices, even if they haven't hit a major top yet, I don't think there's that much more. There's really that much upside. You really have to, right here and now, you really have to focus on the areas where there's value, where there's uptrends. And to me, that's going to be precious metals.
Well, one thing that occurs to me as you're saying this is I'd have to go check the numbers to be exact, but at this point, with the Dow basically even, or maybe even, roughly even for the year, could be down a little bit. It doesn't really matter. But I think gold is probably up, outperforming the Dow since January the 1st. So that's could be a sign to begin what you're talking about. However, at the same time, the mining stocks since January the 1st are down year to date. So what do you think about that dichotomy between the mining stocks and gold itself so far this year?
Well, I think if you look at history, what really happens is the mining stocks, they really outperform after bottoms or after major bottoms, and then they start to slow down before there's something of a top, no matter if it's a major top or a minor top. And I think, and silver's also underperforming. I think silver and the gold stocks are really waiting for gold to break above, that massive resistance at 1375 to 1400. And I think, so I'm not that concerned about the underperformance in the mining stocks, and I'll add silver in there, because over the last 20 years or so, they underperform when the market is not in a sharp uptrend, and gold is not technically it's not in a real bull market yet. It needs to break above the 2016 high and that resistance around 1375. But Mike, I do think when gold finally makes that breakout later this year, I think that'll be the point in time when you see gold stocks and silver not only will they really catch up, but that's when they'll really start to outperform. So until gold is ready to make that major breakout, I don't foresee silver or the gold stocks showing much relative strength.
Well, would you then take short positions against the gold stocks and try to bet that they would crash? Because many people are doing that.
No, look, they already crashed from 2011 to 2015. We've talked about this in past interviews, Mike, but they're following this historical recovery pattern where after a market has a severe mega bear market, and obviously not every bear market follows this, but this is a pattern with respect to a bear market that's down over 80% in the last 2, 3, or 4 years. You tend to have a sharp rebound that isn't that long, and then you have a long correction and consolidation that lasts much longer than the first wave up. So this correction and consolidation that we're in for the gold stocks right now, Mike, they're about in the 1 year and fifth month into this consolidation, and looking at the history of how long do these consolidations and corrections last after the initial rebound. They could be a year and a half to even 2 years long. So there's still, and this is what I've been telling my subscribers in recent weeks and months, my expectation for when is this market really going to take off, my expectation for that has been around the summer of this year. I could be wrong. It could happen in the fall, or maybe it happens in the spring, but I have not been expecting the gold stocks to make this massive breakout in the first quarter of this year. So, and I will also just add in the fact that they're underperforming gold, Mike, that's a sign that the market is probably not going to break out anytime soon. Now, if the mining stocks were really strong and they were holding up well and even outperforming gold at times, with gold here in the mid 1300s, that would be a sign that, okay, gold can possibly break out soon. But the fact that their silver and the mining stocks have been lagging gold so badly, especially in the last couple days and weeks, that tells you that this sector is not ready for a massive breakout. And I I don't see that happening until around the summer, give or take a couple months on either side.
Yeah, I see what you're saying. I just hold my position. I can't predict the exact moment. So, but I'm not 100% invested. If I was 100% invested, I'd be scared. I'd be scared if I was 100% long, even spread out in funds of various things, because it's just scary when the stock market goes up for 9 years when it doesn't pull back last year, not even 3%. And you know a pullback's coming, and hopefully it's over, this pullback. I don't want more people to get hurt. I don't want to see more losses, but I don't want to be 100% invested and have it crash either. So I just hold positions that don't scare me, but I hold the gold stocks I got because in the 2005 and 2006, it was trading just like this, where they were lagging and gold, and then I wasn't able to predict the moment that it stopped doing that, and when it happened, they just went totally crazy. So I can't predict the moment, ahead of time.
But Mike, that's a great point, and I completely agree. My expertise is in technical analysis, so I guess subconsciously when I'm looking at charts, I think that subconsciously I can predict the moment that they're going to break out or when the move is going to start, but you really can't. You never know. And that's why I said before, based on my work, I'm thinking they could begin this breakout move in the summer, but I don't know. It could be 2 or 3 months before. It could be 2 or 3 months after that. It's just, there's no way to predict the future. You just have to assess probabilities, and you do that by looking at all the data that you have. And the big picture is gold is in this massive bottoming pattern that has been developing since after it crashed in early 2013. And when we see gold break above that strong resistance in the upper 1300s, that's going to lead to massive moves in this sector. But Mike, we don't know when that breakout is going to be. I mean, I don't know. It could be in a couple months. It could be in 6 months. We have no idea. I strongly think it's going to be some point this year. And that's why I'm also holding the positions that I have, because trading in and out, you're going to get hurt over time. And Mike, this is a sector, this is a sector where it spends a lot of time consolidating, and then boom, it could double over a 6 or 9 month period. And it's setting up for that to happen again. And like you said, we don't know when that move is going to begin, when it's going to take place. And that's why you just have to, whether you buy the ETFs or you buy individual companies, do the best you can at picking the right stocks, try and get in at low risk entry points. And as long as it's not going down past a certain stop or a mental stop, you just hold on to that position and wait for the market to tell you what to do. It's either going to break out and go much, much higher, or, maybe you might get stopped out of that position at some point. But I really don't think that's going to happen. I just think we're going to see a continued consolidation over the weeks and months ahead. And it's going to be difficult for a lot of people. They're going to sell out. But Mike, this. I mean, we've seen this too many times. I mean, this setup for the next 12 to 18 months is really, really bullish. And that's why I don't want to be doing any trading in or out of key positions. You really have to buy and hold and just wait for the market to make that major move, because everything that I'm looking at indicates to me that it's coming at some point in the next 12 months. Probably more like the next 6 or 9 months.
Yeah, well, that's like you said, and I said it, that you can't predict the future. But then on the other hand, you got to look at what's happening, and you do have to try to make guesses of what is likely to happen, and get all the data. And I'm glad to be able to do that with you and see what your thoughts are and share them and so forth. Otherwise, you're just walking in a dark room and you don't know what you're going to run into. And some people do that. I think people that bought Bitcoin in December just based on promises have now discovered how tough things can be, and so forth. But thanks for taking the time to talk to me and everyone else. And if you could, tell people where to go to get more information from you.
Yeah, thank you, Mike. It's a real pleasure to be on with you, and you can Go to my website at thedailygold.com. I have a free newsletter. I also have a premium service, but if you're not on my free newsletter list, opt in there, and I send you stuff every week, and I put a lot of content on the website, a lot of articles and interviews such as this. So check it out, thedailygold.com.
Thanks.